Want to bring you some new details right now about Paramount's offer to buy Warner Brothers Discovery. Paramount made 3 bids to buy the company over the past couple of weeks here. It first offered $19, then raised that to $22. The latest offer sent on October 13th was for $23.50 a share in cash and stock. Details of these offers revealed in a letter to Paramount's from Paramount CEO David Ellison that was sent to the board of Warner Brothers Discovery. Ellison writes the following in that letter: "We're confident that we are the best partner for WBD, with a combination of our two companies creating a scaled Hollywood champion to the benefit of both of our companies' shareholders, consumers, and the entertainment industry at large." Perhaps the other two most interesting pieces, though, of that letter, one was effectively an offer for David Zaslav, the current CEO and chairman of Warner Brothers Discovery, to be the co-CEO and co-chair of a combined company. So that is a new sort of a new fact, if you will, as they try to attract and bring David Zaslav to their side. Of course, Warner Brothers itself saying we're not doing it, and we are effectively putting ourselves up for sale. So we're going to have to now see whether there are any other bidders. But the other interesting piece of the letter was just a number of references to the idea that we are not just the best opportunity, but a suggestion that we are the only opportunity insofar as the way regulators are going to consider
in the real world
potential deals. And that, you know, the only other folks who may want to buy this company, which, by the way, could include an Amazon, could include the parent company, at least currently of our network, Comcast. But the regulatory hurdles that those types of transactions might create, and not just the attention, but the possibility that those deals would be blocked, would make Paramount the best offer on the table. So it was an interesting letter.
Say what it is. Personal animus the president has against Comcast and NBC and MSNBC and Brian Roberts, and that's not supposed to factor into things, but can you really say it wouldn't?
And by the way, the close personal relationship between the Ellisons and the Trump administration, Larry Ellison in particular, and the idea that if this company were to go ahead and do the spinoff, or the split between the two, tax reasons could leave them then tied up to where you wouldn't be able to have another shot at this until after the Trump administration is over. So timing matters for Paramount. We're going to have Rich Greenfield coming on today to talk about it. He has done the math at much higher levels. He ran through some numbers at $30 a share, at $35 a share. You know, this is just him running the math and the numbers on some of these things. But we'll hear from him because his point is the company that needs it the most will be willing to pay more, and ran through some reasons. Just looking back at sports rights deals over the years, like when Fox originally stole NFL from CBS. There was a reason that it was worth a lot more to Fox at the time than it was CBS.
Well, there are those that say that Zaz would like $30, but he's not going to get it. And if he doesn't take 25, it could go back to 12.
Well, that's the interesting part. But I think I thought the interesting piece of this, when I was reading these letters, was this idea that effectively taking the CEO job off the table, insofar as to the extent that there were people who were speculating that David Zaslav loves his job, and I think he does love his job, and likes and enjoys and wants to be the CEO. The fact that David Ellison would be willing to be the co-CEO and co-chair with him.
But when there's a co-CEO, there's never a co-CEO. There's always one real CEO.
That is also true. So you
this
don't
is
know how
like
long that
dangling a
would last.
job that we'll see. But we'll give you an office. We'll let you hang out on the studio lots. But
I looked that up last time in ancient Rome when they first tried co-consuls. Didn't work then, and so it's like we got 2,500 years or so. Not 2,500, but a lot. Bigly.
The other question is Comcast in this as somebody to push the price higher, maybe act as a spoiler to some extent, be around if something were to split off, if you get some piece of it like they did with Fox and Disney when they were doing that deal and they wound up with Sky. I mean, that's another thing that Rich Greenfield has kind of surmised about, and we'll talk to him about some of these issues later.
I mean, the last piece of this is at $23.50. Now that the investor class knows what's on offer, how much pressure is brought to bear on the board of Warner Brothers to make a deal. And it goes to the piece I think that Joe was just referring to. You may want $30, but and maybe you can get 25, but if you don't get 25, do you get only 12? And that's a little bit of the math.
Yeah.
And then who else is really there? Is Amazon really there? I think they're kicking the tires in a big way. David Faber has referenced some potential interest maybe from Netflix. So Netflix, of course, has been publicly out there trying to say that they aren't interested. So and again, I don't know where the regulators would be on that.
Yeah, I don't know that Netflix shareholders necessarily want them to pay up a lot for content when they've kind of figured out the content wheel to this point. But it was lukewarm at best, the reception that they gave on their earnings call earlier this week. What was that, 2 nights ago?